Apple set out its journey as a hardware company, that's right. But it's not far from the truth that they wanted to tap into their state-of-the-art ecosystem to create a fair payment system across its vast users. Apple, currently valued at a jaw-dropping $2.723 trillion, is currently shifting up its gears to land on its formidable surface of finance. How? Well, once a hardware company with multiple services launched, like Apple Music, Apple Podcast, Apple News, and Apple Fitness Plus, it wrapped the entire ecosystem with Apple Pay. Apple Pay, venturing as a digital wallet system to pay for any of the above existing services, can now be used as a physical card. Yep, you heard it right, just like the debit or credit card you use on your regular day. Ability to pay to merchants not supporting the Apple Pay service through physical card, redeem a fair percentage of cashback on every transaction, offering a high amount of loan, take out a high yield percentage of cash annually, and lastly, pay online and offline, both through card, are indicative of how Apple is transforming into a banking phenomenon. But banks are not to be trifled with either, as they have taken Apple seriously and won't sit idly seeing Apple snatching the crown of their financial accolades. Since Apple has been relying on user acquisition, majorly drawn upon from the banks are spearheading their own digital services to clinch their financial rivalry. Now, the question arises whether Apple will be successful in turning the game around or not. Let's find that out in the following segments. Apple's been in the hardware game since day one. iPhones, Macs, iPads, and more, that's where they made their bread and butter. But here's the catch, they never quite dominated the hardware market. Instead, they carved out a niche as a lifestyle brand. Owning an Apple device means you're part of an exclusive club connected to the Apple ecosystem. Now let's talk money. Did you know that 4 of the world's top 10 companies are into software and services? Apple saw the potential here. They dabbled with services like iTunes, iTunes Podcast, and iBooks over the years. But something was missing. They weren't connected like pieces of a puzzle. In 2014, they played a new card, Apple Pay. No longer just a gadget company, they ventured into financial territory. The next year, they shook things up again. Instead of just selling tracks on iTunes, they introduced subscription-based services like Apple Music, Apple Podcasts, Apple News, and Apple Fitness Plus. And they didn't stop there. 2019 saw the arrival of Apple TV Plus and Apple Arcade. Here's the twist though, it wasn't all smooth sailing. Apple's services faced some bumps in the road, but they kept going. Year after year, their service business grew quietly but steadily. It's a bold move that has us all wondering, why does Apple want to become a bank? Now picture this, Apple, a tech giant, diving headfirst into the financial world. No, they weren't alone. They had heavyweights like PayPal, Google Pay, and Amazon Pay as rivals. But here's the kicker, they teamed up with the big guns, Goldman Sachs, a name renowned in investment banking. Together, they gave birth to Apple Pay. But it didn't stop there. Apple had a grand vision. They didn't just want to create devices, they wanted to craft an entire digital universe. So they revamped their existing services and introduced some new ones. Picture this as chapters in a storybook. Apple Pay as finance, Apple Music, Apple Podcasts, and Apple TV Plus as entertainment, Apple News as information, and Apple Fitness Plus as health and fitness. Why these categories? Because these cover pretty much everything in our lives. In simple terms, Apple wasn't just about gadgets, they were aiming to create a digital service ecosystem from the get-go. And at the heart of it all was Apple Pay, the key to unlock a world of digital experiences. So we've talked about the Apple Pay, the digital wallet that made payments a breeze. You could add your debit and credit cards to it and voila, your phone became your wallet. But here's where it gets interesting. In 2017, Apple took it up a notch. They introduced Apple Cash, a nifty feature for Apple Pay users. It made peer-to-peer money transfers as simple as a tap. You could split bills with friends or pay them back in an instant. But the plot thickened in 2019. Apple had a bold idea, a physical credit card, the Apple Card, born from a partnership with Goldman Sachs. Why, you ask? Well, imagine this scenario. You're at a store and they don't support Apple Pay. No problem, you could whip out your sleek Apple Card and make the payment seamlessly. But wait, there's more. Apple wanted to sweeten the deal. They decided to give users a 2% cashback on every transaction made with the card. And when you used your Apple Card at Apple's own playgrounds, the Apple stores, Apple's website, the App Store, and the other Apple services, you got a whopping 3% cashback. All of this without an annual fee. So Apple Pay evolved into not just a digital wallet, but a physical card as well. Now let's fast forward to March 2023. Apple surprised us again in the world of finance by launching Apple Pay Later, their buy now, pay later service. What's all the buzz about? Well, it's a lifeline for those eyeing big-ticket purchases. Here's how it works. Apple Pay users can get loans ranging from a modest $50 to a cool grand. The catch? You've got 6 weeks to pay it back in 4 easy installments, no interest, no fees. It's like having your cake and enjoying it too. But that's not all. The story gets even more interesting next month. Apple, in partnership with Goldman Sachs, unveiled a high-yield savings account. The bonus, an annual percentage yield of over 4%, a deal that caught everyone's attention. With all these moves, you can't help but wonder if Apple is gradually moving toward becoming a full-fledged bank. Back in 2014, when Apple unveiled its payment service, something interesting was happening in the United States. You see, actually, the EMV standard was facing challenges in gaining widespread acceptance. To put things in perspective, here's the scoop. In 2014, while about 96% of transactions in Western Europe, 85% in Canada, Latin America, and the Caribbean, and around 27% in Asia were riding the EMV wave, the USA was barely at 0.12%. Yes, you read that right, less than a single percent. Well, according to the banks, it was simply too costly to switch the card transaction method to EMV technology. Now here's where Apple Pay waltzed into the scene with its tap-to-pay charm. And guess what? An astonishing 70 million individuals out of all smartphone users in the United States were proud owners of iPhones. In other words, US banks had a golden opportunity to revolutionize the banking experience for at least 70 million customers through Apple Pay, and they didn't need to invest a dime. But there's always a twist in these tales, right? To hop on the Apple Pay train, banks had to share the wealth. They had to fork over 0.15% of each transaction to Apple. Surprisingly, it made economic sense. Banks found it more financially sound to share a slice of the pie with Apple rather than making colossal investments in NFC payment methods. So you might say it was a win-win for both Apple and the banks. Stay with us as we continue to uncover the intricacies of this financial saga. Now, here's where it gets really interesting. Other banks across the USA caught wind of Apple Pay and its potential. They saw it as a way to bring in new customers and keep their existing ones happy. So in just 1 year, from October 14 to October 15, nearly 500 banks, big and small across the USA, jumped on board with Apple Pay. And this was just the beginning. Apple Pay's influence spread like wildfire beyond the USA. In different corners of the world, banks were eager to integrate this game-changing service. Meanwhile, back in 2019, there was a bit of hesitation when it came to contactless payments, both in the US and worldwide. Despite debit and credit cards dominating in-store payments globally, accounting for about 45%, contactless payments through digital wallets were lagging behind at roughly 26%. Apple, being the savvy player it is, took note of this and decided to make a bold move. They introduced a physical card, the Apple Card. Why? Well, here's the deal. Apple Pay users wanted to make payments online and offline within Apple's ecosystem, even at places that didn't accept in-store digital payments. So Apple Card came to the rescue, bridging the gap and giving users more flexibility. Then in April 2023, Apple, always a step ahead, made another strategic move. They introduced a high-yield savings account feature tailor-made for Apple Card users within the Apple Pay service. Here's how it worked. Apple Card users could now open a savings account and stash their cash there. But wait, Apple had something enticing up its sleeve. While other banks offered annual percentage yields between 3.5 and 4.75% for savings accounts, Apple Card saving account boasted a juicy 4.15% APY. And that's not all. Every bit of cashback earned from using the Apple Card was funneled into this savings account. In essence, Apple was handing users a golden ticket to grow their money. With the introduction of the Apple Pay savings account, something interesting happened. Banks started to see Apple Pay not just as a partner, but as a competitor. Apple was becoming increasingly self-reliant for financial services, chipping away at the traditional banking model. The lines between tech and banking were blurring faster than ever before. The question now looms larger than ever. Is Apple on the cusp of transforming into a full-fledged bank? As we conclude our exploration, the idea of Apple becoming a bank isn't far-fetched. With substantial cash reserves and a growing area of financial services, it is definitely a possibility. Yet, Apple's focus isn't solely on banking, but on enhancing user experiences. By offering financial services, they gather valuable data to personalize offerings and strengthen their advertising platform. The question remains, is Apple poised to be a full-fledged bank? Only time will tell, but one thing's for certain, Apple is shaping the future at the intersection of technology and finance.